Morning and welcome back to another episode of Weekly Review of Indian Equity Markets. Before we head into the discussion, let me give you standard disclaimer. I'm not a SEBI registered investment advisor, and all the stocks and securities and indices that we discuss here are purely to analyze the price movement along with the price volume action. Uh, None of the securities discussed here are our recommendation to buy or sell of any nature. So kindly do consult your financial advisor before you take any of the calls with respect to market. This discussion is purely focused on the price volume action for the week. So let's get into the discussion. So Nifty this week, while closed negative 0.5%, but in the interim, somewhere on in the midweek, which is Wednesday, entered a nice wide range bearish candle, and it kind of shook out quite a few traders' position out of their position, which is which is a good news, or which is a standard operating procedure as far as the markets are concerned, because we have been consistently having a upward move for last what 4, 5, 6, 7, 8 weeks of up move. So this is a minor small pullback if one were to use the term. Uh, so when you look at the daily candle, this is a bearish candle that we were talking about, and you see the volumes. Volumes have definitely shown a spike after these two small little candles, which didn't show too much of energy, but they were definitely printing. Uh, they were nothing kind of candle in terms of and trying to analyze price volume action, but this candle is definitely has significance because look at the way it is printed and engulfs the previous 4 5 days activity, so previous 4 days activity. So this is something which is definitely one needs to keep in mind when they are looking at analyzing the market. But the reaction from the buyers have been very strong this time around, and look at the way they have kind of responded with a equally strong wide range candle or decently strong wide range candle, and the next candle also which formed is a small candle. It definitely is much smaller, but it's better than other the larger corrections that we had seen. Uh, when you have a wide range candle printed and the follow through, typically some element of buying you see, and that buying is much smaller, which so something like this. So this was a wide range candle, and then you had the follow through candles were not so strong. Let us look at that may not be the right place to look at it. So this was last year. So let's look at last year. Last year December again we printed a wide range candle, and then there was, if we were to say, some response, but this response was not strong, and then we again kind of got into a sell-off mode. So you see something like this. This was a long tail candle, but then the follow through was not so great, and then we came down again, and then we ahead. Then we started printing obviously bearish candles, much stronger bearish candles. So this long tail negates the negativity, because on the same day you would see response, whereas when you look at that versus this, right, the response was not there, which means that it closed right at the lowest point of the day, which means uh, sellers went sellers went out completely on top of the trade, whereas buyers were thoroughly disappointed compared to something like this candle where buyers made a comeback. So the nature of this candle is definitely something that one has to be careful about. Let us see if the price continues to fluctuate here and then tries to take out. Uh, but either ways, we have to be now watchful of what is happening in this zone. I think the 21,000 zone is the important zone where there is contraction which is playing out, and if we continue to consolidate here, we may see another crack at the upside. But we are definitely in a zone where one has to be a lot more cautious rather than trying to continue to build positions. So, you see this candle. So this is another example of wide range candle response. Then response got weaker, and then a solid push through. So while we are not saying that, whereas you compare that with this is candle pattern is called as uh, dark cloud cover. It's when the candle does not touch the midpoint of the body or is little closer than midpoint of the lower than midpoint of the bearish candle or something. I'll have to check. I'll check. Belt hold something. But yeah, so this is definitely an area where one has to keep their eyes and ears open. Let's look at what has happened in other indices. As I said, that most of the indices have shown similar response. But response in Bank Nifty is stronger. If you see Nifty versus Bank Nifty, so Nifty printed a wide range candle, then we are still somewhere little above the midpoint of the wide range candle. Whereas when you look at Bank Nifty, had a sharp drop, then candle kind of engulfed or almost came up to the three quarters of the previous candle, and then we have another sell off. But yeah, if you see, we are somewhere in similar zone, but the response in Bank Nifty was much stronger than what we had seen in Nifty. Let's look at small cap because this response is very strong, and this says that there is so much of money which is chasing small and mid caps that it is phenomenal. So you see, healthcare had tried to kind of take out the bearish candle. So we have seen some bit of sell off at the top, but yeah, it is much better than what you have seen in Nifty. Consumer durable, oil and gas, micros, Nifty Junior, mid cap, energy. I think FMCG and services. FMCG has done much better. Basically, banks. So let's see FMCG. FMCG had a bearish candle and then it came pharma. Yeah, so pharma took out this bearish candle, and while it's corrected back within the range of previous bearish candle, but pharma did try to get away. Pharma candle will be very different than what you would see. So yeah, this is going to be different. Yeah, it is almost there. It has engulfed the downward pressure it tried to exert. So this is this is where a lot of buying activity is happening. We correct something like here, will be another beautiful opportunity to accumulate IT. let us see if we get that opportunity. But if you see, most of the indices have similar kind of candle as we have seen in Nifty. There are some candles which are so two indices where there is definite advantage is IT index, which is almost kind of engulfed the bearish candle, and we had I think pharma also, which tried to pharma also, which engulfed the tried to engulf the bearish candle. So these two are in great structure. Metal had a good bounce back. Auto is trying to come back. So we have seen in 500, FCG has taken support again at the previous uh, resistance level. So this is good news as far as FMC is concerned. Consumption is doing well. Healthcare is doing well. Healthcare is another structure where right to is similar to pharma and IT to a certain extent. So now let's look at what is happening in global markets, and the strong rally that we had seen in US markets continues to remain strong. While so why did we print this kind of candle? Let's look at US 500. So we printed this candle on Wednesday morning as far as US markets are concerned, and then we have a again similar kind of response in US market as well. Let me try and read through as to what happened on Wednesday that all the markets tried to have a similar structure. It in hashtag same structure. China, let's leave alone. Japan, same structure. Similar response. Korean market. Dow Jones Index, currency. So one or two interesting structures outside the equity markets. One was oil. So you look at the way oil is contracting. So oil went up, came back, went up to the previous resistance zone, which is 97, has come back, is contracting here. We'll try to make a dash, another dash towards 97, 98. This can be, this is a place of wait and watch as far as the commodity is concerned. Let's look at gold. Gold also took resistance exactly at the previous. This is the gold chart. Look at the way we are looking at. We saw rejection, this wide range candle. Then again, we formed a long wick at the previous resistance zone. So let's see how things pan out from here. Gold is definitely contracting. No volume charts. Gold. Next time around, let me try and put a gold ETF structure and see what happens. Yeah, so few weeks back, we had definitely highlighted the structure of small caps in US. That's something which is doing all the right things. US Russell 2000. Yeah. Let's do weekly chart. I definitely had spoken about Russell 2000 when we was, I think, somewhere here, or this candle, even if it was this candle. Now look at the swift move in Russell 2000. 10% quick move in a matter of 2 weeks, and more importantly that, look at the difference in candle. So it's definitely advantage US markets, US small cap market. So this is where I think a lot of small and micro cap US stocks would come up and start making the move, and one has to definitely keep an eye there. And also, let us see, let's review the structure of US 10-year, which is driving this rally, and India 10-year. US 10-year, US 10-year. So bond yields dropped sharply, and which is what led to this optimism across markets. So from almost 5% levels, we have now come back to 3.8, 3.98, which is a sharp 3.9, which is a sharp downward move of close to 22%. And this is what is driving the rally as far as US market is concerned. So we've come back. Do we take support here and again move up? I it's tough to it looks tough purely because uh, there's a fundamental shift in the stance of the Federal Reserve at this point of time. So for things to go against that fundamental stance, it's going to take a lot. So so that being the case, I think one can stick their neck out and say it's tough. While markets will do something, will never do things that you and I want or project or predict. But from a rational perspective, I think there's a logical way to think about it, that it looks difficult for interest rates to kind of take support here and make a dash up again and make a higher high, print a higher high. That seems to be a difficult possibility. What may happen is there can be the kind of sharp correction you're seeing in bond yields. You may see a pullback up to this level. Will shake out a lot of investors once again, form a contraction here, do something like this, then here. I think that's a possible scenario that I believe can play out over a period of next 6 to 8 months. So broadly, if you see, most of the markets have printed a wide range candle, and this wide range candle was definitely which one should keep in mind, not take it like just another candle and keep moving on. Uh, they should definitely have some sense of awareness that there was a wide range candle, and you know, the correction in mid and small cap was much deeper than what we had seen in large cap. So on that day, just look at what has happened in Nifty 500 and mid and small cap index. So let's bring daily candles. Nifty printed a negative 1.41% candle. Uh, Nifty 500, which is a broader index, printed 2% candle. Uh, let's look at small cap, printed a 3.5% candle, and this is something that should definitely. Small cap 250 actually printed 3.35% candle. Uh, cap, micro cap printed a minus 4.2% candle. ASU banks printed negative 4% candle. Okay, let's look at cap negative 3.5%. So clearly evident that while this is a shakeout, but the extent of correction as far as mid and small cap is far stronger than what you had seen in large caps. So look at the bearish angle. 5, 6, 7, 8. 8 days of candles have been taken. So 0.5%. 11 bars, 15 days of activity just got wiped out in one day. So it's definitely something which one has to kind of be cognizant of and take action accordingly. Uh, so with that, I'll conclude this session, and let me thank you again for joining this session on a weekly basis. It's uh, it's a long weekend, so have a great weekend. Merry Christmas to everyone. Thank you.